Well, certainly if we look at equity market moves throughout Asia, it's not really given the platform for European markets to really move significantly higher, and our opening calls reflect that quite clearly. The Japanese market's quite flat. We're not really seeing any kind of moves in dollar yen to influence the exporters here in Australia. We opened up on a fairly sharp note. We saw a bit of buying, and the market had digested all the overnight leads from Wall Street. And we've seen sellers really kick in. We're actually trading at the day's lows at the moment. We might have a bit of a bounce as we go into the final close, but certainly at the moment we're at the lows of the days. Breadth is not particularly great. We've seen a bit of selling coming through in mining stocks. That's down about 60 basis points. Maybe we'll see some selling on open in UK and European mining stocks, but certainly we've seen a fairly negative tape there from the mining stocks. But let's not forget that we have seen a good outperformance over the last 5 days or so from mining stocks relative to other parts of the financial market here. So yeah, maybe a little bit of profit taking through, and I think it's probably partly driven by the fact that we are seeing Dalian iron ore price is down about 1.6% at the moment. So it's given, after a strong run there, it's given people a little bit of relief to take money off the table. We're seeing a little bit of weakness creeping into the energy sector. We are seeing some very, very modest weakness in the oil price. Of course, you know, my view, which I've been pushing the last couple of days, is that we are really setting ourselves up for a buy the rumour, sell the fact. We've seen the oil price creeping higher. We've had the Iraqis, we've obviously had the Saudis and even non-OPEC members such as Russia talking about extending those cuts for another 9 months when we get the OPEC meeting this Thursday. But of course, you know, that's all in the price now. They're going to have to deliver or over-deliver and actually convince the market that they'll still continue with their adherence of those set quotas, and then maybe we can push a little bit higher. But I think we're going to need to see something more, something new to push it significantly into, say, $33 to $53 anytime soon. Bit of money coming off the table then, or I think as we probably go in that last day or so, and Wednesday, you might see a little bit of people looking to take a bit more off the table, a few people looking to hedge some of that exposure after the strong run we've been seeing. We're going to focus on the Australian dollar today. If you look at the double top neckline we saw through in the last couple of months, around 74.91, we have pushed through there just recently. So if we can close back above that, obviously that would mitigate the double top pattern, which would give you a technical target around 72.5 cents. You know, we are moving through 75 cents, and I think that there's a possibility with the low volatility we've got here, the stabilisation in quite a few of these risk assets, that perhaps we can move maybe as high as 76 cents over the coming week or so. But there's, you know, in the absence of any kind of drivers of data, and I think it probably will be down to the US dollar side of the equation. And I think let's not forget that the US dollar itself has a very strong correlation with Donald Trump's approval rating at the moment. And there's been a number of negative articles that have come from the Washington Post and also CNN about, you know, further clarity or further information about Donald Trump leaning on a couple of people to, you know, push them away from the investigation into the collusion with Russia and the influence that they had over the elections. So not a lot on the equity side today. You know, a bit of weakness in the mining sector, a bit of weakness in the energy sector. Commodities are fairly flat on the day. A little bit of buying on the Aussie dollar, but generally I think that's more a reflection of a weakening US dollar more than anything else.